Ryan Petersen, founder and CEO of Flexport, a global freight logistics company, joining us now. Thank you so much for being here to extrapolate on this, because that quote to me says, I'm trying to get the attention of Washington, and here's the way I'm going to do it. Why?
I think thanks for having me on. I think that's fair to say. I do want to get their attention because we have tens of thousands of businesses that ship with Flexport, where we provide logistics services, help them move their cargo around the world. And a lot of them are small, medium-sized businesses that don't have a voice at the table. They don't have a seat at the table. They're not involved at the White House in these conversations. And so no one's really advocating on their behalf to say, hey, these tariffs are going to wipe us out. 145% tariff, or, Trump said this morning maybe 80% is where he wants it to be on goods from China is not sustainable. The companies simply won't be able to make money. They'll have to lay people off. They'll have to, and then you just get this cascading supply-led recession that's likely to hit.
Can you extrapolate on some of the specific challenges your customers are facing, especially in this current juncture where there seems to be a lot of uncertainty, and as they wait for some clarity on these specific trade deals?
I mean, the challenge is pretty simple. It's just like they bought these goods, and the tariffs were implemented so fast that when they bought the goods from China, the tariffs weren't this high, and then all of a sudden they got put in place. So they've already purchased the goods and then just get hit with this giant bill they didn't plan for. Millions of dollars in many cases, and most small businesses don't have millions of dollars laying around to pay it.
Ryan, we just saw the April numbers in terms of imports from China, but you have real-time data that is somewhat unique. So tell me what you're seeing right now, and are we approaching or near this point that many have talked about where we're going to start to see shelves that are empty of products and the like?
Yeah, so we have, starting April 9th, which is the day that the tariffs took effect, bookings from China for ocean freight declined by 60% overnight. Now, a booking is placed about 2 weeks before the container departs from China, and it'll be another 2 to 3 weeks before it arrives in the United States. So really the impact for that is starting this week at the U.S. ports, where you've had Long Beach and Los Angeles, the biggest container port in the U.S., had a 35% decline, 60% from China, but 35% overall decline in container volumes. It's going to take a while for that to show up on the shelves because companies knew April 2nd and then April 9th was coming. They stocked up. They have a fair amount of inventory to sell through. So if they change relatively quickly here, this may not be a big issue. You may never see empty shelves, and I might just be the guy screaming into the void. But if they don't change course, you will see empty shelves later this summer. My view is empty shelves aren't, it's not a tragedy. You go to the store and try to buy something, they don't have it, you'll be fine. The tragedy is if you lose your job because your company can't sell anything and it goes out of business.
Yeah, I'm curious then what you think about 80%, given that's been floated as the new potential tariff on Chinese goods, at least in the interim while something else is negotiated. Do you have any sense from your customers what that would mean for their business?
I think 80% is still going to break most business models. I think a lot of this is also about the implementation timeline of how fast they do it. That, it takes a long time to move manufacturing to a different country. And you can't do it in a month. You can't do it in a few months even. And so if you phase it in over time, companies won't die. They can go find new factories around the world. They can adapt. It's when there's this like central planning that overnight changes the nature of the economy that companies don't have time to react to that. But I think 80% is probably still way too high. Obviously, it's better than 145. We'll take it. But I think one thing that we do know here, by the way, is 10% tariff on rest of the world. Companies absorb that with seemingly no problem. Volumes from rest of world into the U.S. went up by 5% since April 9th. So that's a sign that, hey, 10%, the market can absorb it, life goes on. So it's somewhere between 10 and 145.
Yeah.
It's really hard to put that number.
Well, that's so we want to pin you down. If 145 is extreme on the high side and 10% is easily absorbed, 80% still breaks models. I mean, where is the number where you think vendors would be confident enough to resume orders?
That's the fascinating thing in all of this is that nobody knows. Nobody can know. There's second order effects, and no one knows what the elasticity of their product is. If you raise the price, normally you can just test that, but you can't test it in an environment where everyone else is also forced to raise their price. You can't test these things, and that's why the economy is not meant to be centrally planned. It's meant to be left to market forces to figure out.
finally, you're a private company. I'm just curious what your business looks like or how this impacts your own business. Are some of your services more in demand in terms of what you can do and how you can move things around? But at the same time, I assume with just the lack of overall demand, that may hurt.
It's definitely a mixed bag. I mean, our core business is air and ocean freight, and so, it's price times quantity, and your quantity is way down. So volumes, when volumes decline, our revenue goes down. We do have the silver lining for us is we're one of the largest customs brokerages in the world, so helping companies figure out what HS code they have to use and what the valuation should be and help them pay those duties. We also have a fulfillment business, which is booming right now, doing e-commerce, helping companies ship products to consumers' doors. And all of that business, as Shein and Temu and many other e-commerce providers that we're fulfilling from overseas, as that market goes away, you're actually going to see a boom in U.S. fulfillment market.
Well, I can imagine you're on the phone a lot these days. We appreciate you taking the time out to explain what your conversations look like. Thank you, Ryan.